Welcome to the show, Jason Bible, Texas Real Estate Mastermind. We really need the jingle for that. You know, I was sitting there racking my brain on what we're going to call today's show, and I don't know how much more clear I can make it. Because the data is getting insanely clear at this point. At least to me it is. It's been pretty easy to kind of figure out what's been going on starting back all the way in 2019. And we just don't have enough houses to sell in this country to meet demand. It's that simple. There's just not enough houses for people. We have more bodies than we have boxes to put them in. That is the easiest way to put it. We don't have enough boxes for all the bodies we got. And it's getting worse in Texas. And here's why. People keep moving here. The NAR data came out this week. They ran it through their little analysis. Texas is the number one state for relocations. Number one state for immigration, legal immigration. People are moving here in droves, and we are not building. You want to guess what the number one city is in Texas? That would be Houston. If you're waiting for the other shoe to drop, it's not going to happen. Logan on Housing Wire, they're doing a weekly podcast and a weekly market update. I highly recommend. If you are serious about this business, you will do a couple of things. Let's just cut right through the BS. Because most people really aren't that serious. So if you're serious, you're going to do two things. One is you're going to buy Aaron Clarey's book, The Insider's Guide to the Housing Crash. It's something to that nature. Aaron Clarey, spelled C-L-E-A-R-Y. It's The Insider. It's a black book, like it's black, and then it's a black and white photo on the front. If you're serious about real estate, you will read that book. In fact, I'm getting to this point now with people I've had market discussions with. I'm going to ask this first question. Have you read Aaron Clarey's book? No. I'm not answering your questions. You have not done the reading. I had this chemistry professor in Organic 1 and 2 who would not answer your questions because he would clearly be able to know that you didn't do the reading. But if you did do the reading, hey, Dr. Smith, I've got a question about this, and this. I don't quite understand how this starts this reaction. I'm getting lost in the ion exchange, whatever it is. My calculation isn't quite right. Then he would be the nicest guy on the planet. All right, Mr. Bible. He called everybody by my last name. Mr. Bible, let me explain to you what's going on here. Did this, and this. And he would literally spend the whole class on one question if it was warranted. But if you didn't do the reading, he would just look at you and go, did you do the reading? No, I'm not answering your question. If you are not going to take the time to do the reading, if you're not going to take the time to do your homework, you're really not asking me a question. You're wanting me to tell you a story. What most people really want is they ask another person's opinion, and what they really want is to hear their opinion come out of your mouth. That's actually what most people do. I've been studying psychology now for a couple of years, and it's just, some of it is so fascinating. I'm glad I didn't find this until after I got out of school because from a commercial standpoint, it's kind of a worthless degree. But from a business owner standpoint, it's great because now I've got an idea on how people actually communicate. In fact, a lot of this stuff is going to make it into our class on how to raise private money, which is in March, I believe. It is not a cheap class. It's a couple of $1,000. And I will tell you this, it's going to be worth every penny because I'm going to get into the psychology of raising money. Actually, what we're going to use is game to describe relationships that you have with other people that can help you grow your business. It's really interesting. And I've been using it for years now, and it is excellent. So here's the problem. Hey, Jason, I really don't want to do the reading. I just want to hear my opinion come out of your mouth. Not going to happen. Here's the deal. Do your own research. It's your money. Who's going to take care of your money? You. The problem is most investors, no matter how conservative or libertarian they are always looking for daddy. Daddy's in the HR department. If I just save enough money and I put it into this mutual fund that my employer told me to take, then I'll be taken care of. And that is patently absurd. You worked hard for this money. Let's take it seriously. If you are really concerned about a real estate crash and you're not doing the reading, then you're not really serious. Aaron Clarey's book is a must read. I know everyone goes, I read The Big Short. Yeah, that really didn't have that doesn't really have any real analysis in it. The Big Short is a great example of why most cryptocurrencies went right into the toilet. And that was, there was no way to short the crypto market until they started opening up some of these over-the-counter exchanges. But that really doesn't help you in understanding what happened in 2007 to about 2010. Aaron Clarey's book is the only one that was published the day Lehman Brothers collapsed. So he wrote the book before it happened, and it happened exactly like he said it would. Don't watch this video. Now, here's the other thing. Some of you are so lazy that you're not going to read the book, but then you're going to go to the YouTube. Don't do that. Be an adult. We're going to open up a book and read it. Jason, I don't want to study. I don't want to do the homework. Then you don't want to get rich. That's fine. You're not serious. That's okay. Stop wasting the time of those of us who are serious. Go waste somebody else's time. Get on the internet and argue on Facebook about what you think is going to happen next, even though you are completely uneducated. But, anybody who's got any expertise in anything, when they see someone who is unskilled, uneducated in a topic, and they start shooting their mouth off, you're like, man, what are you talking about? My favorite is, I've been driving these exotic cars now for a year. And I've driven exotic cars off and on once or twice a year. But now that I've been in and out of these things, literally back-to-back weekends or an entire week, I've really gotten a great education. So when I read stuff online, I'm like, oh, that ain't true. Neither is that. Like, you may have driven one around a racetrack for 20 minutes in Vegas, but that ain't like owning it. I'll tell you, that's completely, So you just start reading. Experience is the best teacher. In fact, Randy Pauck says this, experience is the best teacher when you don't get what you want. I always thought that was a hilarious definition of experience. So if we're going to have a conversation about markets, we got to get you educated first. And how do we get you educated? You're going to open up a book. You're not going to listen to some dude. You're not going to listen to Grant Cardone. We're not going to, God forbid, listen to another Gary Vaynerchuk video. And I don't think we should be tuning into Dave Ramsey. Let's build a good foundation first. Then we can start having some discussions. This is Jason Bible, Texas Real Estate Mastermind. I always screw this up. I can't remember the name of this damn show. Welcome back. It's Jason Bible, Texas Real Estate Mastermind. I'm just going to call it the Jason Bible Show from now on because we've changed the name of the show like 3 times in the last 4 years. Anyway, whenever I'm on, Rob can have the Robert Orfino Mastermind Hour. Anyway, it's the same content. Let me put it that way. We just get a catchier name, so we hope that Google picks it up in the search results. That's really all we're doing over here. There's not some grand strategy. It's like, is it easier? Someone type it in, Texas Real Estate Mastermind. Oh, they have a podcast about that. Anyway. We're talking about doing the homework. Step 1 is read Aaron Clarey's book. It's excellent. It's like $10. I don't know what his books are cheap. Maybe it's $15. Then the next thing you're going to do is you're going to subscribe to Housing Wire. I think it's, let me look. I don't even know what it costs. Is it a couple of, let me see here. Housing Wire, maybe it's $300 a year. Housing Wire subscription. What does that run? Oh, let's see. Membership. Ooh, premium membership. I think I have a premium membership. Oh my God. It is $300 a year or $100 a quarter. $300. Jason, I am not going to spend $300 to get educated. I'm like, I know. You're just going to continue to sound crazy like all the other people at the real estate clubs. Why should you subscribe? Simple. Logan Matamashi is doing a great job over there. He's doing a podcast every week. Usually it comes out Tuesday. He's doing a podcast and a fantastic article every single week on what happened in the last week of real estate. It is all data driven. We are not into scare tactics over here. The world's not ending. Interest rates aren't going to 20%. Do you remember all those idiots a year ago that said rates would be over 10%? Like, not investor loans. Like, retail mortgages would be over 10%. We hit it real briefly in October. I know because I was shopping a deal, a really big deal, how much was that? $2.6 million deal. And I got hit with a 10.25 and a 10.5 interest rate. And I'm like, whoa, whoa. And it had a 5.4 buy down. I was like, whoa. This one's a little stiff. When rates get that high, I just go to my private lenders and say, I'll pay you guys 9%. And then somebody goes, yeah, I got a couple $1,000,000. I'll put it together for 9%. Perfect. But a lot of those predictions that started around this time last year were wrong. By the way, ours were right. We knew rates would go up. We didn't know they'd go up that fast. Nobody predicted that. We knew they'd go up. And then I said in February of last year, hey guys, rates are going to go up. We don't know how much, but we know by the end of the year they're going to go down. Guess what? That's exactly what happened. They peaked right around late October, early November, and then they just started falling. We're down in the low sixes right now. Yes, the Federal Reserve keeps hiking rates. No, there's not a one-to-one correlation between your 10-year Treasury and what you pay on your 30-year mortgage. I know that's scrambling a lot of brains right now. That's okay. Got to do the homework. We're going to start with Aaron Clary's book, and then we're going to get a Housing Wire subscription and start reading some of Logan's articles. Why? Because unlike most people you hear out there, this is an adult. Mike Simonson over at Altos Research, another adult. He's like, look, guys, here's the data. In fact, he does an update every Monday. It's free. It's on YouTube. Altos Research. Fantastic. Housing Wire and Altos Research have merged. I don't know what that's going to look like going forward, but two great companies. And they're full of adults. What do the adults do? The adults look at the data. That's what they do. We're not into feelings. The world's all into feelings. That's not going to change. I believe that's because of low testosterone, but that's a whole nother radio show. We're moving out of the feeling phase, and we're getting into adult land. And here in Realville, we look at the data, and we see what the data tells us. By the way, in Logan's most recent podcast, we knew real estate and the marketplace was in trouble in 2005 before the crash in 2008. It was entirely predictable. This is completely different. The title of today's show is Supply is Demand. Real estate is the only business, and this is something I heard Logan say this morning. Real estate is the only business where supply is demand. What does that mean? Most home buyers, like most, 90+%, are already homeowners. So the supply is already, how can I put this, regulated in that marketplace. I am not putting my house up for sale unless I have another house to buy. That's just how that works. Now, in some instances, hey, I'm selling this house because I got to put mom into a home. Hey, I'm selling this house because I'm relocating back to my, I don't know, where I want to retire, or where I'm, let's say, a separate country, and I already own a house there. The vast majority of Americans do not own a bunch of homes. In fact, I'll throw a stat at you. You're going to love this statistic. Only 1% of real estate investors own more than 10 properties. Only 1%. I'm not talking about notes. I'm not talking about owner finance, subject to. I'm talking about actually own rental property. Less than 1% own 10 or more homes. So if you go to a real estate club and you ask somebody, how many rentals do you have? 4. Don't waste your time talking to that person. You want to talk to the top 1%. Who here owns 10 or more rental properties? Those are the people you need to be talking to. Those are what we call adults. Everybody else is just playing. I mean, you want to talk to, let's say you've got some health-related problem, a heart condition. Do you want to talk to the average cardiologist, or you want to talk to the guy that's in the top 1%? It's pretty simple to me. I want to have a conversation with if not the number one guy, the top 3. That's who I want to talk to. I don't want to listen to anybody else. A lot of people, well, Jason, don't shoot the messenger. No, who's the messenger? Because 9 times out of 10, you're not delivering a message, you're delivering an opinion that you believe is bathed in fact. Great. Then who is it giving me this advice? Oh, someone who has 4 rental properties. Someone who's done 6 deals in 5 years. I'm not really interested. I'm just not. I mean, who's coaching who here? Jason, you understand the world's going to collapse. How many properties do you own? 4. Why would I listen to your opinion? You have almost nothing at risk. Most investors don't have enough at risk to really sit down and analyze markets. They may have a couple $100,000 in a deal, but most of their net worth is tied up in other stuff. Stocks, bonds, mutual funds, that sort of thing. And they aren't even educated on that. That's the scary thing. I would imagine most of you here listening to the show, most of your net worth is tied up in things you really don't understand. And I know you don't understand because I talk to a lot of y'all. When I ask you, oh, Jason, is this neighborhood risky? I don't know. What does that mean? Compared to what in your portfolio? What do you own? Well, what do you mean what I own? I own some mutual funds. I'm like, okay, well, how risky are those? Well, I don't really know. Yeah, exactly. So you don't really even know the risk of your entire portfolio. Is that neighborhood? Who knows? We get back from the break. We're going to talk more about supply being demands. Jason Bible, Texas Real Estate Mastermind. All right, ready to go? Texas Real Estate Masterminds, Jason Bible. It is interesting to me to watch people get into real estate because they can assess risk when they see it. When they drive down a neighborhood and it's a war zone. Like, oh, I don't want to invest here. Okay. What's the rest of your portfolio look like? I don't know. It's all paper. It's all in black and white. So we got to start putting some math to it. Because feelings don't matter. There's a neighborhood we've been investing in for the last couple of years that has doubled in value. And you drive down it and you're like, whoa, should we be buying here? I don't know. You want to double the value of your real estate portfolio in 3 years? You go, well, I don't, how do you feel versus what you want? We're getting out of the feelings game. Most home buyers are also home sellers and vice versa. Meaning, when inventory drops, a significant portion of that inventory drop is related to the fact that people don't want to sell their homes. It's something like over 70% of homeowners have a 5% or lower mortgage. They don't want to go buy something at 7%. So they go, you know what? This house ain't all that bad. I think we're just going to sit tight right here. I'm at 3%, and I ain't buying at 7%. We're just going to put a pause on buying this piece of real estate. This whole idea that the economy dips, there's all these foreclosures on the market, and then everyone's living with their mom. Like that doesn't happen. Especially in Texas. Texas didn't have a real estate crash. Southern California had a real estate crash. Phoenix, Scottsdale had a real estate crash. Miami-Dade, real estate crash. Dallas-Fort Worth, no. San Antonio, absolutely not. San Antonio is almost like on this little island over here. It just trucks along at 4%, 5%, 6%, 7% every year. It's just like the little engine that could just trucks along. It's kind of like that on a roller coaster, you know, when you go up that first big drop and it just click, 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 but there's no drop. It just keeps just keeps going up. Just keeps going up. And in Texas, it's a completely different ballgame. People are moving here. There are jobs aplenty. But Jason, the price of real estate, oh my gosh, this is getting more expensive. It's like all this feelings. They're throwing like all this emotional baggage at you. And you go, okay, well, what does the data say? Well, what data? I don't understand. How many people are moving here? Everyone. Number one state. What city are they moving to? Houston. It's real simple. It's bodies in boxes. It's not that difficult. I'm telling you right now, I read all of the nerds. I read all of them. And you can distill it all down. It's so funny. I'll never forget. I was on this panel. It's actually for Quest Trust. And I'm sitting there, and I'm up there with a bunch of note guys, multifamily guys, a couple single family guys, passive investors. I had all these guys up there. And somebody asked me, Jason, how many different ways can you calculate rate of return? And I was like, well, there's 7 you can use. But I said, what's the point? It's really this simple. Bodies in boxes. And where do those bodies come from? 2 places. One is jobs. The other one's something called household formation, meaning making babies. Getting married, making babies. Putting bodies in boxes. Jason, isn't the U.S. population aging? Yes. But some states are and some are not. The state of Texas is actually getting younger. We're attracting younger people, and they're breeding. Like rabbits. Not really like rabbits, but bodies in boxes. Where are they coming from? They're coming from California and New York and overseas. They don't want to live in these high-tax states. They want to live in a state that has lots of jobs so they can make lots of money. They want to have a high disposable income. If you don't believe me, go to any restaurant. What's today? Oh, today is Valentine's Day. I know we're not doing the show. The show will be broadcast, what, tomorrow night, the next night? 2 nights? Okay. So it is Valentine's night. Date night. The once-a-year date night a lot of you people have. When you go out to the restaurant, look and see how many brand new vehicles you can spot. All you've got to do is look at the paper plates. Especially here in Texas, they are everywhere. Everywhere. That typically means a high disposable income. Oh, Jason, you understand? Rates are up and nobody can afford cars. Really? Because I drive around this town, I swear, I almost get run over by every brand new truck I see. Or big giant. Man, I don't know what the best-selling full-size vehicle is right now. It has got to be the Tahoe or the Yukon. And I see those Escalades everywhere. The new ones, they look spectacular. Especially in white, when they're all the trims blacked out. It looks really great. I see them everywhere. Maybe it's just the sides of town I'm on, but I see them all over the place. Heck, I tell you, we should be seeing the new Lexus LX600 everywhere, but Toyota doesn't seem like they're able to get enough of those things off the manufacturing floor. We drove by a Honda dealership yesterday. We went to the Adam Sandler show last night, which was excellent. And drove by a Honda dealership. It looked like it was closed. There were like 10 used cars out there. That was it. Usually that thing would have been packed to the gills. There was nothing there. That's how I know the pandemic isn't over yet. We still don't have enough people for these service sector jobs. I know because I'm out all the time, and the service is not great at most of the restaurants we go to. That's why I always sit at the bar. But even the bartenders have problems because they don't have enough bar backs. Those are the people that like clean up all the bar stuff, take the dishes back, all that. So if you're telling me this world's ending, I'm not seeing it. Rates are up, people are still buying. And the market is self-correcting. Wait a minute, how much is a mortgage? Nah, I'm good. I'm going to stay right here. We're not going to sell this house. So who's buying and selling right now? Well, those people that can afford a more expensive mortgage. I don't know if you've noticed, but it ain't easy to get a home loan anymore. And it hasn't been since 2008. There's a great chart. You can Google it yourself. It's called Mortgage Originations by Credit Score. And what you will find is since about 2010, 60% of home loans were given to folks who have a 720 or greater. And in the last 5 years, it's like 80% have a 720 credit score or greater. The default risk of that group is less than 1%, meaning there is a 99.9% chance that that house will never go into foreclosure. Oh, but Jace, there's a big crash. World's going to end. I'm going to wait. Okay. It's up to you, buddy. That's not what the data says. It's Jason Bible, Texas Real Estate Mastermind. All right. It's Jason Bible, Texas Real Estate Mastermind. Oh, I'm going to wait. There's going to be a crash. I mean, I'm not getting it. Mike Simonson of Altos Research said yesterday, we should see inventory growing right now. That is a total normal business cycle, and it is not. Inventory is not growing into the spring season. It's happened the last 2 years because of COVID. Before COVID, you'd see inventory expand a little bit. We're not seeing that. So what does that mean? We have more buyers than we have sellers because these houses are still being sold. They're taking a little bit longer, but they're selling. Interest rates have more than doubled, and the market doesn't seem to care. Sure, sales have slowed down, but they're selling. It's trucking along, right along. The little houses are selling. The hard data this month, HAR, Houston Association of Realtors, I believe said that the year-over-year data The median house price has only gone up a few percentage points. In fact, I'll pull it up real quick here. Let's pull up HAR. You can just type in HAR report. Be the first thing that comes up. Median home sales price is up 1.6%. So what I did is you can actually pull the data out of this, put it into an Excel spreadsheet. So I looked at every market that had a median home price of $350,000 or less. Those are the houses that typically are first-time home buyers, so $350,000 or less. And then I took out all the markets that had less than 30 sales in a year. Why did I do that? It's a statistics thing. You really want what's called an observation, meaning a number of events of at least 30. That means it's statistically relevant data set. You can type in, go to Google and type this in. Why does N have to equal 30? And you will probably get 1,000 responses. And you can read up on it. But you need to have about 30 sales to build a trend. So I took out all the markets at 350 or above and all the markets that had less than 30 sales in a year. So then I was left with markets that have this is just Houston, and there's a ton of them. Houston's the largest real estate market in the country. So I took out, all I was left with are housing markets that had 30 or more sales in a year and were sold for $350,000 or less. And what did we find? Here's what we found. 13% a year appreciation. Meaning the appreciation at the median home price and below was 10 times what the entire market was. 10 times. Isn't that some relevant data to have? I am telling everybody in our mastermind group and the Texas Portfolio Builders Club and our agents and anybody who asks, Jason, what should I be buying? Houses under $350,000 in Houston, Texas. Well, what should I do with them? Rent them. They are appreciating over 10% a year. That means if you buy a $300,000 house today, it will likely be worth $330,000 a year from now. You just made $30,000. This is how easy real estate is. It is just this easy. Now, there's some other kind of tips and tricks that you can use to be less money out of pocket, using other people's money. You can buy properties that need rehab, so you rehab them and then refinance them, and you've got what's called forced appreciation. You got a little equity in there for your sweat equity. You're not actually rehabbing the houses, but trust me, it's going to feel like you did. Especially your first ones, a little kind of pull your hair out. But here's the reality. All you've got to do is wait. You buy, you rent it out, and you wait. Jason, I want to be a millionaire tomorrow. Not going to happen. If you had bought 12 houses, all in December of 2019, those houses were worth $185,000 each. You just bought them, paid cash, or you put 20% down. You would have made, in 2 years, $1 million in equity. You would have made $1 million. And I was telling you the same damn thing back in 2019 that I'm telling you today. Oh, but Jason, it can't possibly happen again. It is going to. In fact, here's my prediction for this year and 24, because I think 23 and 24 are going to be pretty similar, but for interest rates. And that is, we get below 6% interest, you're going to see an absolute flurry of house buying, just like you saw during the pandemic. Even though folks have 2.5%, 3% mortgages, I think they're willing to move and buy up at 5%, 5.4, 5.5, 5.7. I think you are going to see an absolute deluge of buyers hit the marketplace. Every broker I talk to, every agent I talk to, they all tell me the same story. Everyone is telling me the same story. Jason, I have a bunch of clients sitting on the sidelines waiting. What are they waiting for? Rates to go down. That's it. They're not waiting on a real estate crash because they know that ain't going to happen. They are waiting on rates. Well, here's the problem. Because homeowners aren't willing to sell, that means prices are going to stay elevated and likely continue to increase. If you're looking at houses below 350 grand, they are moving plus 10%. I mean, I'll make the math easy, 12%. Every month you wait on a $300,000 house costs you $3,000 in appreciation. The math is real easy to do. You can go to HAR. In fact, this is the public facing site. You guys want to go to HAR, you type in HAR report, and then you click on the link. It'll be the first link. And there's a menu in the upper left-hand corner. And then you click on, let me see if I can find it. Is it the GMA? Oh, here it is. Then you click on GMA Trending Report. GMA stands for Geographical Market Area. You'll hear something called MSA, which is a statistical area. That's what's used in, so like our area here in Houston is called Sugarland, Houston, Woodlands, MSA. It's gigantic. It's the largest one in the country. That's why Houston is not in the Case-Shiller Index, because we would skew the data. That's why it's not in the 10 or the 20. It's too big. Houston is its own market. So you can pull it up. You type in HAR report, the menu in the upper left-hand corner, you click on it, hit GMA Trending Report. You can download the Excel document that has all the stuff I just told you. You do not have to be a realtor or real estate agent or a member of HAR. It is completely public, completely free. You guys can check my math if you want to. And here's what I did. I just looked at neighborhoods that had a median home price less than $350,000. Then I took out all the markets that had 30 or less sales in 12 months. You will come to the same numbers I have. You guys can check my math. Completely public. So if you were listening to me last year, or you didn't buy some deals last year, it cost you over $30,000 in appreciation. Numbers right there. Numbers don't lie. If you guys are interested in joining us at one of our weekend events or our weekly events, mrtxre.com, mrtxre.com. It's Mr. Texas Real Estate. For those of you who will be here this weekend, starting on Friday night, we'll see you guys there. I will see you Saturday. And yeah, it's going to be a great 3-day weekend. We're going to teach you how we do real estate. I'm going to share with you a bunch of data. But at the end of the day, guys, just buy these things. It's Jason Bible, Texas Real Estate Mastermind.